The back end of a crypto bull market is wild. All the tech stocks have been ripping higher. It's been a really easy trade. Well, crypto's just been choppier.
Listen, we had a huge run in some ways, and crypto is about narrative and flow, right? And so what's the story? You had a great Bitcoin story for a while, and then it kind of ran into selling. I mean, we sold 9 billion ourselves for one client.
I know, with almost no impact, bizarrely.
But that swallowed all that treasury company buying.
Yeah.
And so without that 9 billion, you're probably significantly higher, and so that's why we all hold out hope for that one last.
The famous banana zone.
Today, we saw crypto executives convene with senators on Capitol Hill to discuss the latest digital assets bill, one that is expected to launch a super acceleration in Bitcoin and crypto, and many are anticipating the bullish momentum as well as new all-time highs in the last few months of 2025. As this momentum is building, the institutions are quietly positioning themselves, and Raoul and Mike Novogratz say, everything is about to change. With the next bull market, and with crypto and technology being the biggest investments this year, Powell and Novogratz say they're remaining bullish on digital assets. The Real Vision and Galaxy Digital executives give their portfolio update and say the next phase of the crypto cycle is critical, and why in 2025 we'll see massive capital pouring into the space. With major pension funds and institutional investors on board for the coming cycle, Raoul predicts that crypto is on track to be a $10 trillion digital asset class. Powell says that this cycle will separate itself from its predecessors, as devalued fiat currencies will push more adoption into the crypto market and bring in more capital than we've ever seen before. Let's get right into the latest interview with Raoul and Mike Novogratz as they give their market prediction for the days and weeks ahead. Drop your comments down below and subscribe if you enjoy the content we do here.
Crypto's like the world's biggest casino and there's almost no interference now. But first, you and I need to talk macro, because that's how we always start. So, what are you thinking?
We're in such a weird space. The economy is growing pretty strong. And you've got a Fed that broadly said we think the economy is going to be a little stronger and inflation is going to be a little higher, but we think we should be cutting rates. That's why gold is at the all-time high. Bitcoin's at the all-time high. It's a funny world out there. There's a president who is just dead set on picking a Fed chair that wants to cut rates. There's a huge amount of debt that needs to get financed, and so lower the financing cost helps with the deficit.
Although they kind of lose the control of the long end doing that. Well, Japan certainly has, hasn't it?
Japan certainly has. The U.S. is actually the flattest curve of the three.
Yeah.
They're issuing a lot of bills, not a lot of long end. And at one point, that ratio's got to shift, or it doesn't. And so every single person I know is nervous. And it's funny that, macro, you've made money this year if you just stayed in the trades. Beginning of the year, you say, got to be long gold, long silver, long commodities, long the curve, and probably long stocks. And guess what? Oh, and short the dollar. Every one of those trades has worked. So you look at a company like Bridgewater, who are too big to move, Ben Meltman over there right now, they're up 26%. Ben would have traded himself into a paper bag with all the Trump stuff, but that whole group...
Ben's at Bridgewater now?
Ben's at Bridgewater. He's the deputy CIO. He's got a big job.
Wow, I didn't know that.
What a perfect place for a guy that calls him well and might overtrade him. If you can't overtrade, it's been a pretty easy. Most of my other macro friends, their performance is anywhere from flat to up single digits in one of the great macro years, because all the Trump stuff with the tariffs, with the slow, has just shaken people out of what were their predictions early on in the year.
Also, Scott, who you know as well, has made it pretty clear what they want to do. They've just basically said, he's basically said, I want a weaker dollar. I want to get rates down because I need to refinance the debt, which is a rare thing for them to actually admit what they're doing. And we're going to jam the bills in the meantime. And they're kind of debasing the currency. And he's made it very clear what the trade is. And people just got freaked out by all of the political stuff.
Yep. And listen, we're a very strange time politically in our country, right? The administration, I went to the inauguration, and in the big inaugural ball where everyone was there, the president said, guys, we're going to do more in 100 days than any administration's done in 40 years. And we're going to just hit them and hit them and hit them and hit them. And that's exactly what they've done. They are moving at lightning speed on so many fronts that the opposition doesn't know what to do, but the markets feel like it in chaos. I mean, the downside of it is you are undermining a lot of the great institutions in America. If it's the military, or the Department of Justice, or the Fed, or the FBI. And some of that needed to be cleaned out, but you are now really, I think, not cutting out the scar like the virus is, you're cutting through the bone. And that's scary. And I think the market doesn't like that. And the polls don't like that. And so we'll see what, when you run into midterms.
And the other thing is, growth is weird as well, because we've got CapEx growth because of the data centers, which we'll come on to, is exploding. So we've got the fixed asset investment side going up, but Main Street is pretty dead because of rates. So I can see this kind of dichotomy they've got going on.
I was out to dinner last night with it was a group dinner, but one of Scott's top lieutenants was there, and it was interesting. They see the same thing. They're like, growth is fine. A lot of CapEx, not just in data center, but CapEx across the board. But unemployment, but the labor statistics are harder to also get your arms around, because you're pushing all the foreigners out, right? All the immigrants out. And so in construction, were they on record or not on record? Messy numbers, but it certainly feels like you've got softness in the labor market. That's why they want to cut rates. But you got a pretty strong economy, right? And the second quarter was really strong, and the third quarter looked pretty strong. And so it's a very, in some ways it's a long equities, long gold, long risk asset market.
That's right.
Raoul says it's the fastest pace of adoption of any investable asset in all of human history. By the end of 2025, there will be 1.1 billion active crypto wallets. The pace of growth is hard to comprehend, and it will be the fastest accumulation of wealth we have ever seen. This is the conclusion of a career's worth of research. And every single chart and piece of research leads to the same conclusion. Liquidity drives everything, and crypto will be the best performing asset of them all. Raoul has been stressing to investors for months that all the factors are beginning to align right now, a period characterized by parabolic moves upwards in crypto prices.
It seems pretty clear from that, and I don't see many major risks on the horizon yet.
Well, the only question is, it's become so consensus that, you saw Paul Jones went on TV yesterday, and I love Paul, and he was like, that's it, we're going to melt up into year end, right? Sometimes those calls become, the great butt of jokes later on in life. You're like, the great thing about Paul, he'll say it and he'll be stopped out by tomorrow.
Oh, you never listen to anything he says, as you know. He's got a 3-second time horizon on everything he does. It's like,
well, he is often, the most disciplined guy I know. And that's why I think he's 35 years of trading, and 1 year in his own account, he was down 72 basis points in 35 years. That's discipline. Don't lose your money, you get rich, right? It's shocking how many people have a few good years and they're like, oh, I had that one down 30. And I was like, what? And one down 30 takes a 45 just to get back to break even, right? And so your Sharpe ratio, one bad year crushes your Sharpe ratio.
So listen, why has crypto been heavy, you think, versus equities? All the tech stocks have been ripping higher. Been a really easy trade. Well, crypto's just been choppier.
Yeah, listen, we had a huge run in some ways.
Yeah.
And crypto is about narrative and flow, right? And so what's the story? You had a great Bitcoin story for a while, and then it kind of ran into selling. We sold $9 billion ourselves for one client. Like
I
that's a
know,
lot.
with almost no impact, bizarrely.
But that swallowed all that treasury company buying.
Yeah.
And so without that 9 billion, you're probably significantly higher. Right? Remember, prices are set on the margin. And I think there were a lot of people in the Bitcoin world that had rode this so long that finally decided, I want to buy something. I'm not going to sell all my Bitcoin, but I got a friend that bought a yacht, a friend that bought part of a sports team, and so people trimming because it had been a great run, you're just digesting that turnover.
And do you think that's the main supply has been old OGs plus miners and stuff like that? Is that the main
100%.
supply, you think?
That's the only supply we've seen. And the other piece has been, remember, Ethereum was dead, and then all of a sudden you've got the Genius Act plus Tom Lee and Joe Lubin with their DATs, and it became a buying machine. And so ETH had a spectacular run in the last, 2.5 months. But that's, you go from 1,800 or 1,600 all the way to 3,800. That's a pretty good run.
Yeah.
And so, on the year, these things are whatever, 30%, 32%. Not stunning, good year.
But usually it's back end loaded as well, almost every time.
And so that's the question listen, if you looked at the normal 4-year cycle, you'd be lightening up and you'd be getting flat into Christmas. Like, what could be different? Dangerous freaking words. It's different this time. There are two things that could be different. We are going to pass a market structure bill, and that plus Genius is going to allow, at one point Apple's going to have stable coins on their iPhone. Like there's no excuses anymore that there's regulation around what's a commodity and what's a security and the SEC saying we want you to be on chain. And so I think there's an acceleration of the existing giant players in consumer and financial markets getting into crypto. We are going to see tokenized stuff, probably starting with tokenized equities and mortgages and everything else. That's good for the narrative of all these level 1, L1 chains. You also have a president who says, I'm going to pick a dove. And we are risking Fed independence. Again,
did we really have independence, though? Honestly, I don't think we did. I mean, from yelling to go from one to the other kind of shows that it's all one thing now. I thought that was the dumbest move a president had done, is taking a Fed governor and making the Secretary of Treasury. Literally, I thought it was the dumbest thing. I said that over and over. But Chairman Powell's his own guy. And so I do think there's Fed independence. And what's coming out of this regulation? Do you have any wind of that yet? When it's going to come?
I think they're two different approaches, but you're going to broadly, I think, say that 20% threshold of ownership is decentralized. And if you're under 20, open source code, a few other things, that's a commodity and it'll be CFTC regulated. And the rest will be security. What's more interesting, I guess, is once you know that, like, where security tokens can trade, and are there going to be different levels? Are you going to have to go through the whole SEC process to become a security token? And is that going to be easier than it used to be?
Powell stresses this pattern is normal and necessary to flush out weak hands and reset leverage. He highlights Bitcoin's high correlation to global liquidity, which remains supportive, even during temporary liquidity air pockets. He believes the market is setting up for another strong leg higher. Similarly, Bitwise CIO Matt Haugen supports this view, pointing to a dip-then-rip pattern, where sharp pullbacks are typically followed by massive rallies, up to 190% gains historically. Both argue that patience, not panic, is key. The banana zone is alive, just misunderstood. As the momentum in the crypto market is building and institutions are positioning themselves, Raoul Pal says everything is about to change. He says the next phase of the crypto cycle is critical, and he's stacking big bets in his portfolio right now. With the next bull market, and with crypto and technology being the biggest investments this year, Raoul Pal says that he's remaining bullish on digital assets after significantly increasing his position size during the last bear market. The former Goldman Sachs executive gives a portfolio update on which crypto assets have the biggest upside in the coming months. He says we're about to see massive capital pouring into the crypto space. With major pension funds and institutional investors on board for the coming cycle, Raoul predicts that crypto is on track to be a $10 trillion digital asset class. Powell says that this cycle will separate itself from its predecessors, as devalued fiat currencies will push more adoption into the crypto market and bring in more capital than we've ever seen before. Bitcoin is one that is headed for an unprecedented price milestone, and Raoul foresees a financial tidal wave that will catapult cryptocurrency to new highs. Raoul says the crypto world is on the brink of something massive, a seismic shift for Bitcoin and crypto in what he calls the banana zone. As the momentum is building and the institutions are quietly positioning themselves, Raoul says everything is about to change. He recently shared his take on the current economic uncertainty, with tariffs and recession fears creating market volatility, that a major market rally is on the horizon. And that's where Bitcoin comes in. Bitcoin has been trading more like a risk asset lately, meaning if the market recovers, Bitcoin is expected to surge alongside it. But the uncertainty is key here. If the market remains stuck in limbo, Bitcoin could face short-term pressure. So we could see a sharp recovery in the next week. The bottom line, Bitcoin's next big move depends on how this plays out.